Well, as has been the case through February, markets continue to remain volatile, and that is obviously largely driven over the last couple of weeks with tensions between Russia and Ukraine, and that has now inched higher. President, after the Ukraine invasion by Russia, all indices have looked in the red. Well, President Biden also announced sanctions late last night, India time, on Russian banks, Russian sovereign debt, as well as certain high net worth individuals and the like, high profile individuals. And he promised that more sanctions are on the way, so it doesn't end here in any case. Tensions have definitely escalated, and that's led US markets lower. So, all three US indices have fallen, and the Dow has closed around 1.42% lower in trade yesterday. When we look at the S&P 500, that too is down around 1% or so yesterday in trade. And when we look at the Nasdaq, well, that's down 1.23% at close yesterday. European markets were mixed, though, while they factored in a lot of their US markets were closed on Monday, mind you, and European markets factored some of these events on Monday during their trading session. And that meant that European markets were mixed in trade on Tuesday. The DAX is down around 0.25%, but that's about it. When we look at the FTSE, it's up around 0.1% or so. The CAC 40 was absolutely flat, and the Stock 600 was up around 7 basis points or so in trade yesterday. Well, when I look at how US futures are looking in early trade today, there's a slight positive bias. They're marginally in the green, so that's definitely good news for investors as well as markets globally. And when we look at how Asia has opened in early trade today, we can see a bit of green here. So when we look at the Shanghai, it's up around 0.4%. The Hang Seng is up over 0.5%. The SX 200 is up around 1/3% or so, and the Kospi is up around 1/4% in early trade today. So clearly markets reversing some of those absolutely negative vibes that they had thrown out over the last few days, and that means that some of those reversals have started to show already in markets today. Mind you, did not give you data on the Nikkei. Japan markets are closed at least today on Wednesday, which means that we don't have data on Japan, on how Japan has opened at the moment. When we look at the SGX Nifty, that too is showing positive cues. Well, it's up around 0.6%, so definitely good cues from an Indian market standpoint. The other places of large impact from this Russian crisis is definitely crude and gold. Oil is now currently sitting at $92 a barrel. Everyone's waiting for how the Russia-Ukraine crisis plays out, and US crude had surged 3% at least at one point of time yesterday before it leveled off. When we look at gold, gold has eased from its 9-month peak. It was well above that 1900 mark, well on its way towards 1925 before it eased off. And mind you, one more key aspect is what people forget: Russia is a key gold producer. So that will also impact gold, maybe currently as well as going forward as well, depending on how the sanctions play out. The dollar index is holding out just above the 96 mark in early trade as we speak. The US 10-year treasury yields are steady at around 1.94%. Mind you, they were in the 1.8% range yesterday, so they've recovered quite a bit after falling sharply. And Bitcoin is trading just above that $38,000 mark. That's a roundup of how global markets as well as commodities and crypto are looking in early trade today.